What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig and we are here to look at the charts. Happy Monday. I hope everyone had a fabulous weekend. Before we begin, make sure you scroll down, smash that thumbs up. Also, leave some comments down below. Let me know what you think of the price action, what's going on. We had a little pump last night. Will this last, or is it just another trap? That's what we're going to talk about. We have some mixed signals in the chart, so let's take a look at it. This is going to be a longer video. We're going to go through some more detail. We're also going to take a look at Ethereum, Litecoin, XRP, gold, and silver at the end. So make sure you stick around for the whole video. Remember, all the traditional markets with gold and silver and everything all together give us a better, more clear picture. So as of right now, this is pre-markets. It is 8:01 a.m. This should be out before open, but Dow is up 126 points, S&P up 19.75, and NASDAQ up 81.5. Let's take a look at the Dow Jones. As you guys know, this is what we've been watching here. We are showing hidden bearish divergence, which is higher highs in the RSI, lower highs in the price action. The invalidation of this right here will be a break of 33,271. That is this high right over here. If we break that, my next target for that, and this would mean that Bitcoin would possibly get a pump higher. Remember, we've been talking about 28 to 31,000 range. Could we be going there? I don't believe we're going to get there just yet. I think we got a lower to go before we hit that, but it is possible. We're going to take a look at the scenario, so make sure you stick around. Like I said, make sure you watch the whole video. Share it if you would, and if you're not subscribed, definitely subscribe. We do daily updates Monday through Friday, sometimes on the weekends. But as of right now, and you guys know, my targets are down here in the 24 to 26,000 point range for the Dow. Now, if you look here at the trend line on the daily, we do have room to come back up for one more test on this top trend line. So that could be that one last little rally up. Although you guys know, I do think we are still in a macro bear trend for possibly a year or more. Unless we cross above this top trend line and get support, this is what I'm looking for, these lower lows. And obviously, it could go way lower than that. We'll talk about that as it develops. So taking a look at the DXY, we're getting a little drop today, but remember this 105.64 area. Let me move this up a little bit. 105.64 area is where I would start to get bearish if we open and close some candles below this. We'll take a look at that parabola that everyone's looking at, that parabolic trend line. I've drawn it in right here. We have gotten bounces off it. And again, the bottom of that is right around 105.65. If we break below that, then possibly, and only then, have we broken the parabolic trend line. If we do break that, there is a possibility we could go, this rally could go higher. But again, we're going to take a look at the charts. So as you guys know, this is my monthly, and this is the 55 EMA. This is our major resistance area around that 24.5, 24.560. Let me move it down just a little bit onto this trend line, or I'm sorry, onto this EMA. So around 24.5. That is the highest that I think we're going to go for the monthly close. Like I said, we could get a spike above that, but as long as we close below here, I remain bearish in the macro. Obviously, like I said, we'll take a look at the smaller time frames too. Taking a look at the weekly, as you guys know, we've been watching this. Once we broke out of here, our target hit perfectly, that 25.5, and then we had another bear flag. And what happened? Our target hit perfectly at that 17. I think I had it at 17.7. Those that had been watching know all these targets were weeks ahead of time. And this one, if we break this trend line down on the bottom here, which is going to be somewhere around 20,600, if it was to happen next week, could be 21,000. But if we break this bottom trend line, then my next target's $8,000 area, 7,500 to 8,000. Now, remember, this is a weekly chart, so this takes a lot of time. So our next weekly major resistance up here is around that 25.4. which would be the 13 EMA. And then we have the 200 EMA at 26.5. Our 21 EMA is right around that 28 to 30,000 range, depending on how long it would take to get up there. That would be the pump. So these are areas I'm looking for shorts. I did put a short in. It hasn't filled yet for today. Maybe it'll fill by the time of this video at 24.2. I was going to put my stops at 24.5, but I'm putting my stops at 24.6 range. I'll show you why in the smaller targets. But as of right now, well, it is 24.2. So that short did hit. We'll see what happens there. We also have this target at 14, right around 14,000 even. And we'll take a look at those two. So this is the macro and this is the log chart. These are the Fibonacci channels I've drawn in here using my Fibonacci channel tool. We're going to zoom in right over here. Look at where we're at. This is why I put it at 25 or 24.6, my stops. So as of right now, this trend line you can see off of this wick here, and we tagged it and got rejected here. Now, as of right now, that's at about 24.530, 24.540. If we get above that, our next point of resistance is this fib channel here. That is going to be around 25, right at 25,550, right in that range. So if we do get a spike up there, I think that's where we get rejected. Now, to get actually bullish, we need an open and a close of a weekly above that 25.6 area. If we get that, start getting support on this trend line, then we could be going up for a big fake rally up into this range. Although, as you guys know, I think our highs are in. I'm looking for the low in 2023. Obviously, that's going to take time, and I do think we could be well under 10,000, as low as 3,500 as a possibility. But let's see what's going on right now on the daily. So on the daily, this is the RSI we've been watching here. We have not came up to test this quite yet. If we do, I think that's a great point of rejection and then a continuation to the downside. As you can see, we are making hidden bearish divergence here too in the RSI. We have to see how the daily closes to confirm this. But we're making higher highs and in the RSI, lower highs in the price action. Right here, this 24.3 to 24.5 range is my major resistance area. And I've showed you guys why, and I'll show you in Ethereum, it's the same and why. But you look at this rising broadening wedge here, and that was our target from way back in November. We talked about coming down to hit this range. And I said once we broke through this, that would become major resistance. And that's where we're at now. That is major resistance as of right now. So if that remains resistance, as you guys know, I drew this in, we could be looking at something like this. Now, that's if we get a bounce at the 17.5 area and then come up, test that for resistance and come down. But as you guys know, we'll look at the 4 hour here in a minute. But before we do, make sure you check out Prime XBT if you are interested in trading. By far the best exchange out there. You can trade Dow, S&P, silver, Forex, gold, oil, all from one exchange. They don't trade against you. They are an actual broker. They're not using their own funds, so they don't benefit when you lose. They would rather you win because they make their money off commission. So anyways, definitely check them out. And you can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 will get you 25% off your fees. The link is down below. I also have a tutorial video on it on my YouTube page, and at the end of the video, if you stick around to the end, you'll see the videos there. I have the Amazon video I posted on December 2nd along with the Prime XBT tutorial. Now let's take a look at where we're at. So as you guys know, this is our major resistance area, and if you look at this channel we had drawn here, we had a couple fake outs to the upside. We're getting rejected on that right now. That's one of the reasons I put my short in at the 24.2 area and put my stops at 24.6. And the reason being, I don't think we're going to get up to this 25.3 area, and I'll show you why. Right here where we broke, this was our low. And then once we broke this, like I said, we did not get a bounce at our low. Everyone was expecting a bounce here at that 33,000. We did not get a bounce. We went all the way down another 23% to the 25.4. Then when we come up, we did not quite hit this low again. We were about, I don't even know. Let's see what we were off there. We were about 2% from hitting the top. So if we look up here and we do the same thing right here from that low, 2% would be right at about actually 24.7, 24.8. So it is possible we get up to that range. I may have to adjust my stops after this video so I don't get stopped out. I may come up to as high as the 25,000 and kind of just ladder in more shorts on the way. But the only way I would get bullish here is if we get above this 25.3. Is that what it was? Yeah, 25.3. That's low right here and get support. Then we could be looking for that $28,000 to $32,000 range that we've been talking about. But if we come back down, we do get rejected here. Depending on how long it takes to get to this trend line, could be between 20,500 and 21,000 if we do come down to this area. Then we would look at our next target, and that just being looking at this as a big long bear flag and coming down. That would get us at 83.34. Now, that doesn't mean we go straight down like I showed you in the daily. That could take till November or something to get down to that area. Now, if we take a measured move of just the width of the channel here, that would get us down to approximately 14 to 16,000, somewhere in that range. But again, watch this low area. If we break that, we may just plummet straight down to, if we do what we did over here, could be as low as 12, 13,000. I know nobody's expecting that to happen. Usually that's when things like that happen. But if we do break up above this, the very bullish target would be 28,200 range. But again, we would have to break this low here at 25.4 to start looking at that. So if we do break that 25.5, let's say 25.5, if we break that, we could be heading up to that 28,000 range. Now, to be in a safe trade, let's look at this real quick. This could be a rising broadening wedge. We've talked about this. And let's take some measurements in here on the 4 hour and take a look at what's going on here. So if we take our Fibonacci retracement and we go from this top to this bottom here, we got rejected at the 7.786. It's at 24,190, and that's why I had my entry at about 24.2. As of right now, we're getting support there. Now, if we don't break back below this, we could get up to retest this high again. And that would be our major resistance area. If we do get up into this range, watch this 4 hour RSI for hidden bearish divergence. We make a higher high, and you have to measure. You can't use the wicks, so wherever the body stops is where you want to measure from. But if your RSI is up in this area, 75 to 80 range, and you're still making a lower close than 24,550, then you're going to create hidden bearish divergence here in continuation to the downside. And let's do another thing. Let's look at a wave. Let's say this is finished here, right? So we would go from this high down to this low with our Fibonacci extension. And then we would look for a wave count, that being wave 1, 2, and then 3 would get us down to that $20,500 range, maybe get a bounce back up to that 25 or 21.5, and then continuation down to as low as that 19.5, somewhere in there. And then what you would probably get is that would be a wave 1, and then you'd get an ABC up, maybe back to that 23,000-ish, and then continue down for one big one wave, and then, 2 up, get everyone bullish again, and then 3 coming down to our next targets around that 14.5 range. That would be the measured move if we break the bottom here. If we break the top, now this one's going to be a different one because we're looking at it as a rising broadening wedge, right? That could get us up to that 32,000 range. That up here. So unless we break this, top of this range here at the 26,000, looking at this chart. Now remember, I'm looking at the 24.5 to 24.6 range for major rejection. 24.6 is where I'm going to have my stops right now. But like I said, I may move it. I may dig in. I'll be announcing on Twitter what I'm doing. So if you want to give me a follow on Twitter, it's at CryptoSavvy1. But as of right now, like I said, I think this is just getting everyone super bullish again, making it look like, you know, the bottom is in. Everybody wants to think that even if the bottom was in, you're not going to just, it's not just going to rally straight up and blow all-time highs out, guys. It's going to be years. And I'll explain what I'm looking at there. But let's take a look at the Amazon compared to Bitcoin chart. I drew this on December 2nd. And I said, this is the .com bubble. We had to wash out all the scammy .coms that were around, right? This was the big washout. And now we need to wash out all the crypto scams. And that has already begun. If you look at what happened with Celsius and those guys, it's starting to wash out. Is it done? No, I do not think it's nowhere near done. And as you guys know, I've measured this all out. This bottom here, this being a wave one. Now this is a bubble pop pattern. People say you can't compare this with that. And I've showed you in Sony, I've showed you in Nintendo. When a bubble pops, this is how they pop, and they take a long time to recover. And the reason being, the long time for recovery is because people lose confidence. And I've talked about having a false bottom for sometime towards the end of this year, maybe November-ish, and getting down to that, you know, $5,500 to $8,000 range. Get another little rally, get everyone bullish again down here, and then come down. And when it breaks that three-wave right here, just like Amazon did, that's when everyone loses confidence, and it takes a very long time for recovery. It did recover, but it took 10 years to break the all-time high. Actually, let me show you in the next chart. So looking at, this is on the monthly. This is where I believe we are right now in Bitcoin, right in this area. It took 10 years to break this all-time high. So from this point where I think we're at right now to here was about 9 years. So it'd be 9 years from now if this chart played out like this. It could be much longer. Sony and Nintendo still, I don't know if it's Sony, I think it's Nintendo. It's been 15 years, still hasn't broken its all-time high. Sony, it's been 20 years, still hasn't broken its all-time high. So just be cautious. I know everybody's expecting this huge rally to the upside and everything is good and peachy. And, you know, I'm not saying that can't happen. I'm just saying be careful out there. I know there's a lot of people listening to these guys that have already made money. You know, they bought early, or they're just making a bunch off their Bybit links or whatever. They already made their money, guys. They're holding a lot, probably. I'm sure they sold a whole hell of a lot, but they're holding a lot, and you know they have enough where they don't care. Now, most of the people watching these videos don't have a lot of money, and they're, you know, taking their life savings and putting it in, or just putting in way too much, way more than they should be risking, expecting that for sure we're going to a new all-time high in 2 years. And guys, that's not a guarantee. Just be careful. All right, Ethereum. So this is our major resistance on Ethereum. Same reasoning. We broke this rising wedge here. That was our target. I told you once we broke that, that would be major resistance right around that 19, which it is. And we're getting hidden bearish divergence here. If you look at lower highs, higher highs, right? Could we get another little pump up? Yeah. If this 1920 breaks, our next resistance would be around 2145. We'll see what happens here. But as you guys know, here are my lower targets for Ethereum. One is 692. If that breaks, around 360. 2 months ago, everybody was thinking, yeah, for sure that's going to happen. Then, of course, this is how markets work. And I explained that back here. Let me zoom in a little bit. Every one of these pumps here, everybody thought it was the bottom, right? And I've explained this since I made this chart. Everyone thought it was the bottom, and then they're, you know, super bullish. Right here, they're super fearful. Some of them may have sold down here, and then they bought back going up, and then it came down just to make another low. Then everyone's super bearish, and then you get a little rally, and then everyone's bullish again, and then you get it dump even lower until confidence is lost. And once the confidence is lost, it takes a long time for people to return like it did here. like I said, 10 years to do all-time high. But I still think we're right around here. We've got plenty further to go. So let's take a look at Ethereum. Like I said, this is what I'm looking for in Ethereum. And this being just looking at this as a bear flag, show you from right here, from when the trend broke. And the trend broke right up here in this area. Once that trend broke, then we can bring it down. That's what gets me that right around the $700 target. And again, if that breaks and we are in the longer term bear, like I believe, we could go much lower. Litecoin, target for Litecoin for the high is 61 or 68.31. That's one we've had for a while. If we're looking at this as a falling channel that we broke out of, that could get us as high as that $80.50 range. I'm not convinced that's going to happen. I think the 68.31 would be the highest if we even get up there. XRP, same thing. If we have a massive rally in XRP, could be around that 56-cent range. But as you guys know, I have this target of 17 cents. I think we hit at least that once we break this 30-cent area. If you look here, see how the price action in XRP is just going sideways, yet the RSI is resetting for more downside. So be careful with that for sure. Gold, this chart is over a year old. This Ethereum chart is over a year old. XRP chart, Litecoin, all those are over a year old. So yeah. Anyways, let's look at gold. Gold, this also is a year old. Higher highs in the RSI, lower highs in the price action. Could still get all the way back up here and still be making, hidden bearish divergence. But this is the daily chart, as were Ethereum, Litecoin, and XRP. But this is my target for gold, has been for a very long time. I still think we come down to this range. All right, let's take a look at silver. Silver, same thing. Looks almost like the same chart. Gold and silver do a lot like Bitcoin to altcoins, right? So we got a higher high in the RSI, lower high in the price action, hidden bearish divergence. Hidden divergence is a continuation of the trend, right? So if a trend's going up and you see hidden bearish divergence, then that doesn't count. But this is a daily, and the daily trend is down. Higher highs, lower highs, hidden bearish divergence, continuation of the trend. As you guys know, my first target is around 15.5 for that. So anyways, thanks for watching, guys. Don't forget to subscribe to the channel. Smash those thumbs up. If you're watching any YouTube videos, just scroll down, smash the thumbs up. That helps the algorithm, especially if they're not charging you for nothing. Like, we're not on this channel. I don't sell any courses and all that crap. There's no cookie cutter program. For one, if you're buying a course to learn how to trade, you can add that to your losses, because you can either buy a course and lose while learning, because you're going to lose while learning. That's how trading goes, right? So then you can just add what you paid for the course to your losses, or you can put in some work and put in some effort and learn to trade. There's tons of free information out there, and probably lose some money. Everybody does. I lost over 6 figures learning how to trade, right? So don't do what I did. And what I did was I started trading, and then I got into, some very good trades and made a whole lot of money. And then just to turn around, thinking I was a pro, then I'd play with more money, and then I'd lose it, right? Then I lost, like I said, I lost pretty much everything. Almost got a divorce over it. It was crazy. The wife was really upset, and this was years ago. And then what I did was I sat down, I really focused, and I knew people were making money off this market. I needed to know how. And like I said, I just studied the markets. I made a strategy that was working, and I took it, and I've created an account with fake money, waited till I was profitable in that for some time. Once I was profitable in that, then I put in a little money, trade it. And once I'm profitable in that, then I could put in more. But I had to have a strategy that works. And guys, learn risk management. Risk management is key. Risk a little to gain a lot. Cut your losses quickly. Don't be, moving your stop losses into deeper until you're eventually liquidated. So make a plan, stick to it. Like I said, there's lots of free information out there. There's no cookie cutter program. Anyone that's selling a course is selling you their bad habits, because if they could trade, they would not need to make courses and sell courses. That's how they make money, not by trading. Thanks for watching, guys. Again, don't forget to subscribe, smash the thumbs up, and I'll see you in the next video. Have a good one.